Thank you so much for joining us on the Dwelling Show. I'm your host, Ola Dantes. I've got Sam Bates with us today. Hey, Sam, how you doing?
I'm doing great, Ola. Thank you for having me on the show, and I'm excited to talk to you.
Yeah, absolutely. So, Sam, obviously, you and I were in one of the multifamily mastermind here in Texas. So, we obviously see each other every other Friday, I believe it is. But just wanted to bring you on to share your story. So, just kind of tell our listeners who you are, kind of what you've been up to, and what you've been up to lately, actually.
Yeah, I got into multifamily a little over a decade ago, 2009. I was a finance undergrad, then I got an MS in personal financial planning and an MBA. I thought I was going to be a financial planner or advisor. I'd worked in a capacity as an investment analyst and loved it, but I was graduating during the time the market crashed, and I couldn't trust the market. And as you know, right now the stock market's going crazy, and the fundamentals in it doesn't make sense of why stocks are going up and down. And so after grad school, I started working at a consulting firm, and I quickly realized that wasn't going to be my path for the next 30 or 40 years. And I focused on real estate. And I was luckily at a TV repair place, and somebody mentioned net mentorship slash, I guess, networking group in Dallas, and joined it. And it's been real estate ever since. I worked a W-2 job until end of 2017. But over that time, I did, I don't know, 20 single family homes around that. Then I started a company with two partners where we focus on acquisitions and developments. And then I closed on another acquisition with another partner last month. So right now I'm focusing on growing both the development and acquisition arm. We've done a few other asset classes such as RV park, a lot development, retail development, but my passion is multifamily. I know there's a need for it, and I feel like you can make a huge impact not only with your investors but the community and your tenants. And it just, I love being able to give back to all those people and impact their lives. And right now, like I said, we closed on 134 unit deal in Atlanta last month, and I'm under contract with my other two partners on some land out in Stephenville, Texas, which will be doing college student housing development. So have a couple different options, and excited to just keep moving forward.
I was taking a bunch of notes as you were talking, a bunch of notes, a lot actually. So you've got about at least 11, well, I said, yeah, 11 years, right? You said you started in 2009, so that's a long time, right? But you also mentioned something, right? You got a master's degree, I think you said in finance, and you went to a consulting firm. You didn't like that. So first and foremost, do you advise people to kind of have an advanced degree? Has that helped you so far in your career? I just think that's a random, well, curious question, actually.
Um, that's actually a really good question, and I've debated that internally in my head for years now. Since I have a degree, I think it's been very beneficial. If I didn't get it, would I be in the same place? I don't know. But my family and specifically my grandpa was always a big proponent of education, and he always wanted us to go to college. He always wanted us to get a master's degree. So I had that force pushing me, and I think it's been helpful, and it's got me into jobs that I probably wouldn't have got in if I just had an undergraduate degree. But and I know it's helped me out with analyzing deals and financial modeling, and especially early on, bringing credibility to people to say, hey, we can steward your money well, we can raise capital, we can develop a property, we can asset manage it. And that's all, I think it's a combination that's all helped me. But can somebody do it without an advanced degree? Definitely. People are doing it every day. I mean, some people own multifamily that didn't graduate from college. So one of my partners, he actually, I mean, he's very successful. He builds 200 to 300 homes a year. He doesn't have a college degree. So it's kind of the path you want to take. As long as you're pushing yourself and growing on a daily basis, you can achieve whatever you want to.
Yeah, in the fascinating insight. I really like that. So you said you made the jump from, kind of your W2 job to doing this. How did you go about doing that? I think that's really fascinating for a lot of people to just kind of learn how that happened. When did you make that decision and why?
Yeah. It was a long time coming, honestly. I worked in consulting for 5 years, and I worked in an energy company for 5 years, and I was doing basically sales and use tax, property tax, fuel, excise taxes. And it was a good job. I was making 6 figures, but it just didn't excite me. I didn't enjoy going to work every day. And I probably could have left the W2 job a lot earlier than I did. But I've always had like a fear or security issues, and money has kind of provided that security for me. So I was like, okay, if I don't succeed, and I was thinking irrationally, but I was like, if I don't succeed, I don't know what else I can do. But over time, through reading a lot of self-development, talking with people, I realized it's now or never. I needed to take that step. And I was at a place where I started early on with a company, and after 5 years, I was the oldest corporate employee there in terms of tenure. And we'd been bought out twice. I was reporting to a company in the Netherlands that I'd never spoke to. So it was just time. It was time to move on.
Yeah, like when it gets to that point, you just know, like, yeah, I think I should go now. Yeah, it gets to that point. Yeah, the other thing you mentioned was you did a bit of, different asset classes, right? You kind of jumped a little bit, did acquisition, development. So how are you able to, asset flex that way? What has really helped you to do that?
I think surrounding myself with good partners has been really beneficial in that. And also, I would say I'm asset class agnostic, in terms of I want to provide investors the best opportunity I can, and for ourselves. I mean, we're investing alongside investors in every deal. So if we find something that produces a great return, I'm going to investigate it. I haven't done industrial, or office and hotel is definitely struggling right now. But I mean, industrial has been as hot or hotter than multifamily the last 5 years. But I haven't dipped my toes in that. But I think once you understand the fundamentals of underwriting and real estate, you can get into different asset classes, or you can leverage your knowledge or resources and talk to people that can help, with that transition, or if you're investing in, say, industrial versus multifamily.
So, kind of in the past, you did 20 single family deals. That's a lot, right? That's a lot of, a lot of single families. But then you mentioned that multifamily is your passion. So you've done both, what is kind of this big shift to multifamily? Why did you make that big shift?
I think it was always there, but I started doing single family because I didn't have the capital built up, honestly. And when I first started doing single family, I was new to Dallas. I didn't really have any, and new to being just a working professional. So I didn't really have that built out network where I could go raise equity or capital. So I started single family, and I did well. I still have about 8 or 9 houses, and they do well, but it's very time intensive for the return you get. It's hard to scale. I think it's hard to raise money. If you create a fund, it's a little different, but if you're raising money to do 1 or 2 houses, you more than likely aren't going to do it unless you're getting it from like a family or friend or something. So just that. And then when you buy multifamily, you're buying a business. Multifamily is based off cap rates, where single family is based off sales and comps. And no matter how great or how much you increase the rent or the NOI, as you know, you aren't going to increase the price if the comp down the street sells for X number. So I think there's just a lot of advantages that, made me gravitate towards multifamily. And the more I invested in it and the more I learned about it, the more I just felt like it was a lot better option than single family.
So you got this land in Stevensville. You're going to be putting it says student housing on it. You also mentioned the 134 unit in ATL. So I think it's time for us to kind of zone in on a single deal, as a case study that you really like the deal. So just kind of tell us, break it down for us. How did you find the deal? Obviously, how did you fund the deal? If it was a syndication, just tell us the whole story about that deal. Just kind of give us an idea. And if you've gone full circle on a deal, you can tell us about that too. I'll be curious to hear that story.
I'll mention the Atlanta deal because the Stephenville's in the very early works. We haven't even got the attorney to create a PPM or anything. But for the Atlanta deal, my partner, he already had an asset in the Atlanta area, and he had a broker relationship. And we'd been looking at deals in Atlanta together for probably a year to 2 years. So we looked at a lot of deals, and one of the brokers sent him the deal. Supposedly is off market. I'm sure he sent it to a few other groups to see if they were interested. And it's a older vintage. It's 1972. It's actually the oldest property I've ever owned. Most of my properties are 2000s or newer. But the owner was an out-of-state owner. They had a property management company that during due diligence, we quickly realized they weren't optimizing rents. They weren't really the maintenance staff. They were just coasting and kind of had a job, and they weren't getting pushed. So they really hadn't turned many units, if any. There was some deferred maintenance that needed to be addressed, and we felt like we're going in at a really good basis, and then we can go in, push rents. We feel like we can conservatively push rents $80 to $90. And now that we've started the renovation program, we think we can go a lot higher than that. But it was a syndication. We raised capital from just our investor network, and we structured it. We were going to go agency debt, but with COVID and the delinquency issues, like we were quoted one term sheet, and then after we got kind of digging into the financials and went under contract, we realized that the seller, I won't say they lied, but they weren't completely transparent with collection issues, and they had a lot more delinquencies than what the T12 showed. So our proceeds dropped significantly. So we altered it to a bridge loan, and then we'll probably, after the renovation, we'll refile the bridge loan, and either obviously if we refi, we'll hold long-term, or we might sell at that point.
Makes sense. Okay, that's interesting. So with those kinds of situations, you just have to have that, I guess, ability to like pivot, right? You've got this one thing, and you thought you were going to go agency because usually you get a lower rate, but then last minute you realize the seller wasn't telling. I like the way you put it. I'm telling all the truth. They're lying basically, and then you had to pivot.
It's all accounting practices. They were doing a different way than most sellers do. So, I won't say they were cooking the books, but there's definitely some stuff that wasn't completely transparent when we went into the deal.
Yeah, but it starts to kind of, you see those things in DD, right? It's hard to miss, right? So yeah, we're definitely dwelling into the quick rounds. These are going to be quick questions, quick answers. You ready, sir?
Yes, I am.
All right. First question: what makes you, Sam, unique? What is that differentiating factor that separates you from the next guy or the next girl?
That's a good question. I think maybe from just a holistic standpoint of how I view my life. Like I was saying earlier, I do have some. I focus on education, and I continue to self-develop every day. I read. I work, I think, harder than most people, and I have the tenacity that will get me through different times and hard times. Like every single real estate deal I've ever done has never went 100% to business plan. So you just have to pivot, like you were saying. You have to strategically think, and I think I have a good just my skill set is able to change and adapt when things happen, and stay calm and cool and make adjustments as needed.
Makes sense. Makes sense. Second question. You said you read a lot. So what's the last book that you read, and what was the one thing you picked up from the book?
I'm currently reading, it's called Michael Hyatt's Your World Class Assistant. And there's a lot of things. I feel like I'm CEO all the way down to janitor. And I do everything almost, and I'm trying to outsource a lot of it. And I think the biggest takeaway is even though you can do it, you can outsource it to somebody else that will do it a lot better, or they'll do it almost as good as you, and then you can focus on higher value add activities. And I've known that for a long time, but it's just a good thing to read and to get reiterated into your brain.
Final question. You're working hard, you're busy, you've got, your bills going. What do you do for fun?
Um, I I love being outside. If I lived in Denver or Salt Lake or something, I'd probably ski every day. Um, that's one of my passions, but just being outside and getting out in nature, I think being out in green space and exercising it helps me clear my mind and kind of recenter and be able to go forward. And when you have that energy, it helps you get up for all the daily battles and beatings that you're going to take.
Daily battles and beating. Totally can relate. If there's somebody listening, I'm gonna connect with you, Sam. What's the best place people can reach out and get to know you more?
Yeah, you can reach out through social media, or you can call me at 972-855-7654, or my email address is sam@trinitycapitaltexas.com.
Sam, thank you so much. Really appreciate your time today.
Yeah, thank you, Ola. It's good to talk to you, and hopefully I provided some value to your listeners.
Sure you have. Thanks.
Thank you.